got most active options, I've got losers, I've got gap opens, I've got gap downs, gainers, percentage losers, percentage. I mean, take your pick. The fact is, folks, most people want you to be confused. I don't, and Pristine does not. We want you to bring it in. We want to simplify it so that you can have just a couple of things that you're going to do. You're never going to hear us at Pristine saying, you know, take $500 and turn it into $5 million in 5 days. That's not the style of trading that we teach, nor do we want you to get involved in. We want to teach you how to make a reliable amount of money in all of your accounts, no matter what style of trading, for the rest of your life, and then pass it on to generations of your children's and your children's children. Now, let's say we wanted to take a look at the stocks that were gapping open today in the New York index, okay? I'm going to pick this up here and drop it into this minder. These are the top 40 stocks today in the New York Stock Exchange that gapped up. Now, we can analyze any one of these because I have them linked to my broader charts, and it won't take us long to find a pattern like here. And all you have to be is totally focused and specialized to know exactly what you're doing. Now, it's a $113 stock, and it was an easy reversal to read, and you could see it's about $1.50 to be able to take up above that. I mean, we will see so many opportunities. By the way, these stocks I'm showing you now are what? I can hear you yelling at me right now through my computer. They're relatively strong, Ron. And I go, well, why? Well, because, Ron, the market gapped down, silly, and these stocks are gapping up. Well, why would you trade these? Market's down. Because, Ron, the market gapped down and started showing me bullish indications that I could trade up into the void, and the people that were short on these stocks aren't going to fool around, and they're going to cover their shorts. So this is going to be the easier money. So if you want to pull out 50 cents, $1, $1.50 on a stock with totally low risk, very quickly, and being able to do it in relative conjunction with the market, you're going to be in great shape. We could look at dozens of stocks. We could put any 5 of these in the top 10 or 12 stocks on a list and totally just focus on those. Not scan anymore for the rest of the day. Be totally aware of what's going on in the market and recognize that we want to time our trades. Now, a lot of people will come in and going, well, why don't I buy that one? Well, folks, look, it moved from 1620 up to 1860. Would you not agree that $2.40 move before the pullback here is a really hefty move on a $16 stock? And if we take a look at something like that, it's moved 15% in probably, an hour? So we teach our students to be very careful about buying these pullbacks after a climactic move like that. You know, could you have gotten in on this 2-bar pullback? You could have. It's not the best of quality, but you could have. Could you bought over this 2-bar consolidation, which we call a 1, 2, 3, 4 pattern? Yeah, you could have. And you certainly could have pulled some easy money out of this chart. But you wouldn't expect much more of the rest of the day. When the market now starts going down, the market is more bullish after the first hour, and this stock has already put in a sizable day. And that's all part about being really objective in your analysis to make sure that you are looking. Now, when you see a chart like this, folks, you do not want to play what we call dots and spots. This would be like getting into the Roach Motel. For those of you in the United States, you can get in, but you can't get out, and that's what you want to happen to the roaches, but that's not what would happen in our trades. We don't want to get into things that we can't read. These are garbage. Leave them alone. You don't want to trade them. I know it went up from $8.80 to $10, but they're very, very risky. There may not be someone on the other side of your trade, so stay away from them. You want to trade stocks that have totally tight bars, easy to read patterns, stocks that everyone wants to own. Here's a 1, 2, 3 pattern right here that moved up aggressively, $1 or so, and you want to make sure that you take advantage of those. Trading long on a day like today, as long as the market's not making lower lows and it's going totally against you, is like taking money, taking candy from a baby. And I hate to use that analogy because that's a terrible thought even. But it is so easy to be able to pull money out of the market on a day like today if you know totally what you're doing and time your trades. Now, I have my favorite scans listed in here from the Tal tree. There's just too many. I could go in here and show you so many other things. For example, we could take a look, and I will show you very quickly that in the, let me show you a couple other things real quickly here, is that when we take a look at various other possible here's the NASDAQ index component. Here's the stocks in the NASDAQ banking sector. Here's the NASDAQ biotech sector. Here's the NASDAQ financial 100. Here's the NASDAQ transports. take your pick, folks. We could literally take anything out of a sector that's moving up with the right approach and stick with that stock that we know is working in conjunction with the sector in the market and be able to pull money out of that particular stock. So really being able to focus, to specialize is critical. Now, if you wanted to take a look, for example, at the Standard & Poor's S&P 500, there's the S&P 500. Here's the small mid-cap. Here's the small cap. And I'm going through these just quickly to show you how there's too much. Here's the sector indexes, automobile and parts. Maybe that's running today. Biotech and drugs. Here, put that in and take a look at those. Understanding which sectors are going. And I have a sector minder here, for example. And so by being able to look at the different sectors, here's defense spending. Here's oil services, which is the strongest performing sector on the day. Knowing which sectors are, in fact, moving at any given time allows me now to go in and take a look at any of these areas. Choose those that I've traded before that I'm quite familiar with, or you can have a list ready to go, chip sectors or otherwise, VCA's chips, and you can go down the list and see energy, resource, and material. You can go ahead and you can decide which ones. Whoops, I can't get it. I thought that was PETC. Wrong one. But what you'll do is, again, you just pick them up and you can just load them up into this minder, and you'll be able to choose very easily which sector you want to be in, okay? Now, having said that, okay, I'm going to clean this page up here real quickly, select page, and you can see there's too much information here, so preparation is the key. I have my favorite scans, and I only love trading 4 scans. I have a few more than that, but my favorite scans are the gap up, the top performing 40 stocks, the ones that gap down, and the 40 top losers. That's it. That's all. I have my entire life's work in front of me every day. I have the same routine. I do the same thing. I prepare. So I only trade NASDAQ, for example, intraday for income producing. So for me, my preparation would go something like this. I would have scanned the night before. I would have looked for some stocks that had an opportunity to move up with continuation. One of the stocks we looked at in coaching today, for example, was UHS, which one of my students brought to my attention. Whereas it's too late to get in this stock for a swing trade, this is perfectly suitable for us to consider trading it intraday. So when we broke above this pivot, we had some room to move up to this top resistance area over here. Some of the students actually took trades in this today. Beautiful opportunities. And so you can see how if they had put this on their list for today, they would have been able to take some nice trades in this breakout right here, for example, and an easy 50 cents up into that area. And that's all it's about. Sometimes all you need is one trade a day. My best trading days are sometimes one trade and done. And turn off the computer, one and done. And I have a lot of students to share that same kind of philosophy because it's so exciting to do that and then have lifestyle with making some money. Now, for my preparation, I'd be scanning and I'd be looking for trades like this that may have bigger ranges that maybe aren't gapping up the next day. And sometimes those will be far better and give you more opportunity than the ones that are gapping up, which a lot of people love looking at. And I don't mind that because I do it every day as myself. My DVDs go into, of course, the right ones to choose. But in this case here, I would look at the gap up stocks pre-market. And these are really the stocks that gapped up this morning. Hold on a second. Let me see if I have another minder here. Yeah, here we go. Let me use this minder. Yeah, this will be far better. In fact, let me clean up this page one more time. I apologize, guys. I want to use that minder without the other one having been in there. So let me open up this minder here now. Okay, and what I'm going to do is I'm going to open up this one, and we are going to make a little list as if we were going to prepare and trade this morning together. And this is what I'm going to do, working with some students several times in that other course at the end of May. Now, so let me go through this again. Gap up stocks, I'm going to throw them in here. Now, what I'm going to do quickly, because this will renew itself every so often, is I'm going to get rid of everything that's trading under, 900,000 shares. I'm just going to delete them. I have no interest in them whatsoever. Could care less, don't matter. I'm going to take also the last price that they traded at, and for me, I trade, $10 to $50 or so. So I'm going to get rid of some of these lower price stocks. I'll leave a couple of smaller ones for you to look at. And what I'm going to do quickly now is And you can cut and paste this as well, but I'm just going to do this the old-fashioned way because it only takes me about 10 seconds. I'm just going to go ahead and I see my old friend JRCC today was one of the gappers. Seco, I love it. One of my friends, JBHT, love trading it when it's right. Amogen traded it more times I could count. Express Scripts, man, do I love trading that stock. And APOL, which is in the same category as APOL and Seco, and Coco are all in the same sequence, which is education. So now I've got a starting list here of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. That's all I need. Now, I'm not necessarily going to trade them yet. I'm going to look at them on the daily and the 60-minute charts and see whether there is an opportunity here. Now, this one's an exceptional gap. I was laughing about this with my coaching group because Tom, when we had dinner together on Friday night after he recorded his DVD, had mentioned to me something like 7 or 8 years ago when I taught him his first class, DNDN was one of the trades that I actually talked to him about, and all of a sudden it shows up today. So I don't know, coincidence I suppose, or like my young kids used to say when they were younger, coinky-dink. So now, this is an excessive gap in a relatively bearish market. Now certainly there's no harm in looking at it, so we can, but you can see the weekly stock is totally extended. It's moved up from like $7 to $23 on the gap. That's a huge move. We'll go ahead and leave it for your benefit. And now this one I actually like quite a bit. You can see that it has a big day yesterday, big day, okay? And so there could be follow-through. And so you always want to put these on your list for the follow-through day. Look at the huge volume yesterday. And so that doesn't happen by accident, folks. So when you get that kind of volume with what we call a pro gap igniting a move to the upside, oftentimes they will continue up. Now, we would have traded this stock yesterday on the gap up, knowing that it gapped up over that area, because we call that a gorilla gap, and we teach that to you in the very first technique strategy course. My favorite subject to teach, because I see light bulbs going on, and folks, all you need is this one strategy. You could have traded this stock yesterday and today, and you would have been just fine. We take a look at APOL. Don't really like it as much because it's been crushed lately on the daily. If it gets up above this area of pivot, or especially above there, maybe there will be an opportunity in there. So we'll keep it on the list just to take a look, but it has to meet some very rigid requirements for me before I would even touch it or consider trading it. So we go, oh, look at this one. This one is now up on its third bar up, gaining speed. The volume was higher today. It was obviously under accumulation. It came up above a base on the 60-minute. I love it, I love it, I love it. This one I like as a continuation play into a tradable void. This one I don't really like as much. It's 1/3 the price of APOL. It may not give quite the nice moves, but we'll take a look at it together. This one gapped above the previous highs. Could be a candidate earlier. We'll keep an eye on it. Oh, second, third day up, fourth day up. This is great. Up into a void. Little $6 stock. We'll take a look. I don't like this one at all, so I just hit the delete button. I go to the next one. Don't like that one at all. Get rid of it. This one I don't really like so much. It is above the base over here, trying to get up above this resistance. We'll kind of look at it. I would look at it because I like trading the stock when it's right. This one, if it gets up above the consolidation, I may keep it on the list. And this one I love if it breaks above with the tradable void. Now, there are 4 or 5 of these that I would not put on my personal list, okay? But for your benefit, I've left them on here to show you how easy this is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I would really rather you get your list down to about 4 or 5, and I'd rather you have maybe 3 or 4 alternates, and I'd like you to do this both short, and I'd like you to do it long. And we'll do the shorts in a moment. I might keep you an extra 5 or 10 minutes, but I want to show you how simple this is. Now, once we have ruled them out from a tops-down approach, and we are waiting for the market to show its colors. In other words, we need the market. We don't know the market's going to pull back and then give us a bullish opportunity. We know that we're gapping down into an area of support. We don't know the bottoming tails are going to form, but we are going to have a bias that if this area holds, there may be an opportunity to trade long in the first hour, moving up into the tradable void. So knowing that, our entire focus now will be on the 5, maybe the 15s. Maybe we'll drill down to the 2 minutes for a better entry. And all we're looking for now is some type of quality that we can play. And it has to be a pattern in our plan. Well, right off the bat, I can tell you that this pattern here on a 2-minute chart is going to be phenomenal. It's going to be low risk and easy to play. What we teach in our very first course. We know that this stock is gapping up, right? The market is gapping down, right? So we know that there's going to be an opportunity. And here we have a red bar, no follow through on a 2-minute play, and we could have gotten in on that bar if we wanted, or if we really wanted to be extra careful, we could get in above 1978, hold on, go back to our 5-minute chart, wherever you are on Mr. 5 Minute, and made easily $2 on this trade with a no pain gain. Now for those students that have taken our second course, they could have bought this 2-bar pullback above the green bar, which would have been perfectly acceptable, and put the stop below the bar that got them in. So if my TPM2 graduates wanted to buy above 1926, and they wanted to put their stop below 1912 for a 14-cent stop, and they wanted to take it in conjunction with the market moving up around that time, easy money, easy money. So our very first candidate here would have produced. Now on Express Script, it actually became a little bit better trade here, okay? And we'd have to go back and take a look at our 5-minute chart on Express Script and see how it looks on all time frames. But I'm just trying to show you how it takes so little to make a really decent amount of money. We didn't have really a tight pattern until we actually pulled back here, put in a 4-bar consolidation, moved up, and then another consolidation and moved up. You certainly could have been pulling out 30, 40, 50 cents on them if the market were in relationship to your trade. Now, I didn't look at the market here, but if the market was not moving up to help you at this point, I would not have taken the trade. So we're looking at multiple time frame analysis to make our decisions. This stock actually wouldn't have made our radar. It actually gapped down. I don't know why it showed up on this list, so it's not one that we probably would have just found as easily. This one as well should not have made the gap list, and sometimes that'll happen. So you want to make sure and confirm that you have relative strength in the stocks that you're looking at. You want to. This one did gap up and then it pulled back, and you could have bought the pullback, but it's a bit sloppy. But it is certainly within a better relative strength. This one would have been totally one of my favorite trades. This gaps up, the market doesn't. This stock holds, the market pulls back on the spiders, and when the market breaks out on the Qs, as it did right about this time, I am all over this trade on the breakout. I'm buying it above 630. Typically, I don't trade stocks under $10 because I like a little more range, but the point is, a pattern is a pattern is a pattern. And you could have easily, with low risk, pulled out 15 cents on this trade with less than a nickel stop, and that's the kind of trading that you need to do. So that would have been one of my most favorite trades, showing relative strength to the market, and that's exactly what you want to be looking for. You could have put any 5 of these on your list, stuck with the 5, and totally made some money. Now, let me clean this up one more time. I'm going to go through one more exercise with you, and then I'm going to try and close off this evening because I know that I promised you about 90 minutes. You obviously should have a short list. So when you see the market beginning to turn on you, and you can see that that we're starting to now have some bearish opportunities, you want to be prepared. So naturally, you will have looked at your stocks that gapped down this morning, and here's, of course, Apple and many others that have gapped down, and you're going to wait for the market. Now, you're going to do the same exercise. You're going to make sure it's trading below an area of resistance. You're going to make sure that there's opportunities or a what we call guerrilla style of trading, so that way you are putting the probability you trade. Right now, I'm just looking for some that meet my criteria that I would have put on my watch list, which I'm going to work with our students and our graduates with much more carefully. But I want to make sure that what I'm putting on my list has the opportunity with a good size. Oh, this one looks actually perfect. Here I have near pristine sell set up on the daily chart. I have a red bar that's obviously underperforming with the market. So this would be for sure one of my focus. I could care less what they do. But what I'm looking for is simply an opportunity, and those of the graduates in the course will see a wonderful pristine sell set up here. Then we did make a higher high in that area, so you might have been reluctant. You might have taken the 1, 2, 3 here, and then you could have taken the breakout down in that area. You could have pulled out a nice, easy 60, 70 cents by just paying attention on that chart. This chart is also, look at this, no follow through here, couldn't make a higher high, consolidated, short the breakdown, and this would have been an easy, no pain gain without ever being stopped out of $1.50. All you need is a couple of charts per day. Some long, some short. Maybe you're going to watch 5 of each, depending on the market environment, to then wait and stock and choose what you do carefully. This is the way in which you prepare. You have to create the long list. You have to create the short list. You have to scan the evening before. You supplement the morning of your trading. Then you put the list of your choice, whether long or short, depending on the market bias, ready to watch. You focus on just a few. You wait for your pattern. You check off your checklist, your pre-trade checklist, and then you enter your trade and you manage accordingly. It doesn't need to be any more complicated than that. Now, you do have to learn, of course, how to read candle language, how to read on the understanding support and resistance, but over time it becomes easier and easier. Again, I'm not the sharpest knife in the drawer. And my wife reminds me of this all the time. So, I mean, she came out of the TPM2 course, the advanced course, back in 2000, and she waved her finger at me in front of Greg and said, "I've got two things to tell you, buddy." And I go, "What?" She goes, "Well, first of all, you're still stuck in day one of the course." And I said, "What's number two?" She goes, "Well, with what I know, what you should have known, we should have already owned a small country in Europe by now." So she always puts me in my place because we trade together and we have 7 monitors and we handle 7 of our accounts and trade in all time frames. But the truth is, I prefer to be stuck in a small amount of information. I want you to as well. The very best traders will only do some things routinely, over and over again, repetitively. Now, folks, I'll answer some of your questions. Paul, I'm going up here to a couple of the red questions here. Hold on a second. Let me catch up with you guys. Hold on. Ron, how many stocks do you select the previous night for the following day? Well, listen, Serendip, that's a great question. It varies, of course, but ultimately, I'm going to take my list. If I have 20 that I've selected, I'm going to narrow it down to about 10, and I'm going to probably rule out the others because I need to totally focus. My worst trading days when I have too many to watch, when I have too many even alternates, because I'm human like everybody else. And so, I'm looking at my stocks. I got an extra 2 minutes. The market's not doing anything. I'm just curious. I'm wondering, hey, I wonder about those other 10 that I picked last night, And so then I start looking at those, and then I come back to the ones that I was supposed to be watching, and boom, they went without me, and I lost my focus. So, and this is inherent for all traders. So to totally honest with you, the critical part is to have a narrow list, okay? Ron, do you take into account the relative volume of the stock? Totally. I need to see that if I'm in an uptrend in the stock, the volume is not climactic and we're ending a move, and then I need to see that we're starting to power up. By the way, I know some of you will be leaving because you're not interested in the question and answers here. I hope most of you will stay, but I'm only allowing a certain number of new people and a certain number of graduates to come into a class with me at the end of May. So you better call your counselor and get on a list if you're even somewhat interested, because I don't know how quickly that will actually fill up, and I don't know how many we're going to allow because I want to do this as a real special program to see if I can accelerate everybody's ability. Call your counselor. Okay. It felt like an earthquake here a second ago. You might hear me hesitating. I thought, wow, big winds or something going on. I don't know what's happening out there. Okay. Ron, how does your chain minder work? Please demonstrate. These are pre-built scans, okay? And if I were to have an empty list, which I'll empty this one out for you, I can go either to the towel tree, and these are just embedded in Realtic. I would never trade without these tools, but I'm just picking it up, which are the gap ups right here, and I'm dropping it into the minder, and now I've got the top 40. If I wanted to take a look at the stocks that were the biggest gainers on the day, I can see that DNDN, of course, shows up again. Express Scripts, of course, shows up again. Apple. Many of the stocks that gap up are the same ones that are going to end up being the strongest on the day. But let's say you want to trade later in the day, and you have already exhausted your gap list, you've exhausted the list that you looked at before, you can now either go to your universe that you should have created, or you can go to the stocks that everyone's looking at trading. It doesn't mean that you're going to trade them, but you need to look at them. And you can see that all these stocks had much better days in the market today. The market obviously was down 137 points, and all of these stocks are up on the day. This is where you want to be trading. You want to trade relative strength to the market or relative weakness to the market. Much easier to trade in this fashion. Excellent question, by the way. Ron, nice name, by the way. Excuse me. You can. We can find stocks that are gapping up for tomorrow already tonight, okay? And, you have to look at them individually. Now, the